What do you think about this thing, Trace?
Man, this thing's freaking sweet.
I thought the airplane was appropriate because everybody wants to just not pay taxes and fly their airplane around for free. So in this video, we're going to talk a little bit about how we selected a company vehicle. We're going to talk a little bit about some of the tax benefits for having a company vehicle, and we're going to talk a little bit about what you need to make sure you do so you can stay compliant with tax laws with your company vehicle. Stay tuned. Enjoy the airplane. Enjoy the information. About getting the G-Wagon registered. You did a little bit of research, so tell me about what we got to do to get this thing registered in the company name.
Well, most straightforward point that the DMV here in Joplin is telling me is that we need to bring that title in, got to show proof of ownership. May or may not have to show the odometer disclosure, but we can get that done. We get it inspected, Goodyear or wherever else works. We also have to bring a check for payment for the registration, show proof of insurance, and possibly bring the property taxes from the last 2 years. So we'll see if Ducommun can pull this off.
All right, nice. So right now, Trace is off trying to get the vehicle registered. So he goes over to the courthouse, and he needs past property not property taxes. He needs past personal taxes. Well, it's a business account that hasn't owned anything but real estate, so there's no history of vehicle taxes that have been paid. So good luck getting tax receipts for payments on things that haven't existed. So then he calls me and he says, hey, I'm just I gotta go get the title. Well, you can't just go get the title for something that we haven't titled in the business name yet. So we'll see how these problems work out. Stay tuned.
Hey guys, how's it going? So, you want to know how to register your new company vehicle. So after signing, the back of the title and getting your new work vehicle for the company, you're going to need to take that along with some tax history that you can pick up at the local courthouse. You're also going to need to get insurance, and you're going to need to get a state inspection, and you have to take all of that over to the DMV in order for them to sign off on it and give you your tags for your new vehicle. Titling, is pretty straightforward. You sign the back, you're going to bring that in to the DMV. They're going to take that one, they'll send you a new one with all your fresh information on there. State inspection is the easiest part, also one of the funner parts. You get to go over, to any one of the lovely licensed auto places in Joplin. And you can drop that off. Only took me like 10 minutes. Got a full state inspection done, ready to go, and passed. Insurance. Now that's depending on how much searching you do, that can take a little bit more time. But always make sure that you check into what kind of deductions you can get on your insurance, what kind of things you might qualify for, whether that be a good student discount or a military discount or safe driver kind of discount, anything like that. You definitely want to ask your insurance people. They're gonna want to help you out with that. So you take those things in along with payment. I do recommend a check. Take a checkbook in there with you to the DMV. They do charge a little bit more from the card. It's not that much, it's only a couple bucks, but if you just want to save a couple bucks here and there, taking a checkbook with you could save a lot of trauma. So that's how you do it. Enjoy your new work vehicle.
So let's talk a little bit about some of the tax benefits of owning a vehicle inside of your entity that does your real estate investing or your business. So we recently purchased a cheap cash vehicle. One of the things that allows us to do is the entire purchase price of the vehicle can be depreciated in the first year as an expense. Had we not done that, had we bought a more expensive vehicle, we could depreciate the value of that vehicle over a period of time, say 5 years. So you take the value of that vehicle, divide by the number of years, and then every year that amount of money would depreciate against your earned income. So in our example, where we bought one vehicle for a low cash price that we can depreciate the entirety of the vehicle in the first year, we can take the entire purchase price of that vehicle and any money that the business made, we can subtract the purchase price of that vehicle from the money the business made before we start determining our taxable income. If we bought a more expensive vehicle that we had to depreciate over a number of years, then that dollar amount would go, for that number of years against the income the business earned. So another thing, in addition to depreciation, we can also take the expenses from the vehicle. So now the money that we're spending on gas, the money we're spending on insurance for the vehicle, the money we spend on repairs, rather than paying that out of our own pocket, we now pay that out of business expenses, which are expenses that also go against the income that the business earns during the year. So let's put that in perspective. Let's say that the vehicle you own right now is the vehicle you're driving, so you have to earn income that you pay taxes on, and then you spend what money's left over on the vehicle that you use to go to work. Now, if you were to use that work vehicle, you bought that work vehicle inside your company structure, now you're paying for your vehicle, you're paying for your gas, you're subtracting that from the income that your business is earning, and then you're taking what's left over. Looks like an airplane just landed behind us. That's pretty cool. So rather than taking your money, paying for your vehicle, and then paying taxes to the government on that larger amount of money that you earned, now you're paying your expenses, then paying yourself, which leaves less money that you have to pay taxes on overall. So by buying the vehicle inside of your corporate structure, you're able to go ahead and spend your pre-tax dollars on repairs and then harvest the post-tax dollars for yourself. Now I know you want to know, how can I use these tax laws to my advantage so I don't have to pay any taxes, right? Well, personal use of a company vehicle is considered a fringe benefit. So much like flying, something you can't use this company vehicle just to avoid paying taxes on your daily driver. Now, that being said, your company, as long as you're taking, so let's start off with this. I'm not a lawyer, I'm not an accountant, so I can't give you the exact laws, but here's some general guidelines. As long as you're taking good records of your driving and you're using the vehicle for company purposes, it's going to be a legitimate depreciable expense. Now, let's say I use it for business expenses and for some personal driving. This is where your record keeping comes in. The IRS will allow you to use the company vehicle and not worry about the business times. However, the times that you use it for personal driving or your employees use it for personal driving then becomes a fringe benefit, which is going to be taxed under 3 different rules. And I'm not even going to try to get into that. But you can have your accountant look at those rules and find out which one would be most advantageous for you. So the bottom line is you take good records of the legitimate business driving that you do, and you have good records of the personal driving that you do, and then the fringe benefit is only going to be taxed for the driving that's done as a personal vehicle. But you still keep all of the benefits of owning the vehicle inside the corporate entity, getting the insurance, all your expenses related to the vehicle at a tax advantage status, and then the fringe benefits are only taxed for the mileage that the vehicle was driven personally. And the airplane on us it's pretty cool. So we'll just talk some more with the airplane on a stick here behind me.